Hello everyone, welcome back to my channel. If you are new and is interested in investing, before you start investing, you need to determine what investment strategy is suitable for you. First of all, you need to know what is the reason you want to invest. Do you want to build wealth for retirement, save for your kids' education, or just collect some money for a rainy day? Inflation is on the rise every year. Just ask yourself a simple question. Does your bank pays you an interest of higher than the inflation rate? If the answer is no, then you should really start considering investing. Secondly, you need to understand what are the types of investment products that are available. Each investment product has a different type of risk associated to it. As an investor, you can choose to invest in individual stocks, exchange-traded funds called ETF, real estate investment trusts, REITs, bonds, and even government-created products such as the Singapore Savings Bonds. Last but not least, cryptocurrency is also one of the investment products out there. These are the more common ones which you may have already heard of before. Disclaimer here, even though savings plans from banks and insurance companies is also one of the investment products out there, I won't be mentioning it in this video as I am not familiar with them. Do check out with your bank representative or insurance agent if you would like to know more details. Of course, what you ultimately choose to invest in has to be in an instrument that you understand and are comfortable with taking the risk on. The myth of high risk, high return is not true. You need to understand that high risk can potentially give high returns, but it is not always guaranteed. Most importantly, don't be over greedy when it comes to investing. Some investments take time, so you have to be patient. Now, let me briefly share with you the main characteristics of some of the common investment products without diving into too much detail. Issuance of bonds is a way for an organization to raise money. For instance, when you buy a bond that is $1,000 worth from company XYZ, you are lending the money to the company for a period of time, say 5 years, and in exchange, the company XYZ will pay you an interest of 3% every year until the bonds mature. When the bonds mature, that's when the company XYZ would return you the $1,000, which was the capital you paid 5 years ago. The interest rates for each bond varies with the associated risk. For example, buying a bond from an established company will give you lower interest as compared to a startup company, since it is highly unlikely that the established company will default their payment when the bond matures. If you have low risk appetite and are seeking for an investment products to preserve your capital, Singapore saving bonds are among the safest investments as they are backed by the government. You can also redeem the bonds early without any penalties. The interest rate that Singapore savings bonds provide range about slightly below 2%. Stocks are a type of investment available in the stock market that gives you a part of ownership of a listed company. Stocks are the most common instrument that people turn to when they talk about investing. A general rule of thumb is that you shouldn't invest in stocks with money you will need within the next 3 to 5 years, and longer horizons are even better. The stock market can fluctuate quite a bit over shorter periods, so before you invest, be sure you understand your risk tolerance and that you are mentally prepared to ride out the ups and downs. If investing in individual stocks isn't your cup of tea, a good alternative would be to invest in ETFs. An exchange-traded fund ETF usually tracks an index or a pool of many companies. Investing in an ETF gives you a small stake in many different companies and is more cost-effective than investing in 30 different companies individually. REITs basically pool money from investors to invest in a portfolio of income-generating properties. REITs are getting more and more popular nowadays because investors get a regular dividend income, and at the same time, because you are buying the shares of the REITs, you will be able to reap the gains from its capital appreciation as well. The potential fluctuation in the share prices is the reason why investing in REITs is considered high risk. Cryptocurrency is a relatively newer investment investment products as compared to the ones that I have mentioned previously. COVID pandemic has paved the way for more innovation and has increased the use of technology in our day-to-day lives. As digitalized payments are more popular nowadays, at least in the developed countries, people are getting more and more receptive to accept cryptocurrencies as a mode of payment, especially because crypto has a decentralized structure that allows them to exist outside the control of governments and central authorities. Many investors are considering investing in crypto as one of the new hedging strategies. Having said that, as this is still a relatively new asset, the risk involved in investing it is a lot higher and the returns are not guaranteed. It really depends on what type of coins you are investing in, but be prepared to lose all your money when you invest in crypto. If you have high risk appetite and are interested in knowing how crypto would evolve in the coming decades, investing in crypto assets could be one of your investment products as well. Nowadays, we are all very lucky. Technology provides us access to vast stores of knowledge. There are many articles and videos on investing. I strongly urge everyone who are interested in investing to do their own research. All the online references can only guide you in making certain investment decisions. After all, you need to be responsible for your personal finances. You won't want to invest your hard-earned money based on what others say. Okay? Regardless of how promising a certain investment may sound, remember, always do your own due diligence. Personally, for me, out of the investment products that I have shared earlier, the only two investment products that I have not invested in before are bonds and Singapore savings bonds. I just find that bonds doesn't fit into my investment strategy. Okay, reason being, I don't like my money to be locked for a period of time. Even though Singapore savings bonds have no lock-in period, I find that the interest rate is too low for my liking. Personally, I am willing to take a bit more risk in view of potential better returns. Okay, bear in mind, select the investment products that will best help you in achieving your goals, and that could be part of your own investment strategy. Let me know in the comment box below on what investment products you have or what investment products you think you would like to explore. Thank you for watching. I will see you in my next video. Bye!